Good morning, ladies and gentlemen. Welcome to today's European Session Outlook. This is Alex, Senior Account Executive at GDM. We'll start with the North American markets. The report Friday was mixed as the NFP headline number was weaker than expected at 151,000, but wage growth, participation rate, and unemployment rates all showed improvements. The dollar strengthened against the yen and the euro on Friday after the Labor Department's report. The pace of hiring in the US tapered off in January, but wages rose sharply and the unemployment rate dipped below 5% for the first time since 2008 to reflect a tightening labor market. We also had unemployment rate in Canada 0.1% worse than expected at 7.2%, and net change in employment in Canada 0.2 thousand worse than expected at negative 5.7 thousand. The Dow 17 points down, Nasdaq 120 points down, big movement. Dixie up to 97.14 from 96.59 on Friday. The USD Canadian dollar was the biggest mover, 156 pips up. Today we have Tier 2 news, labor market conditions index, and from Canada, housing starts year on year, seasonally adjusted. The week will be important as Wednesday we have Fed Yellen testifying, and Friday retail sales month on month and ex-autos and retail control from the US. Right, on to the European markets where we had German factory orders year on year 1.3% worse than expected and month on month 0.2% worse than expected. The French trade balance came out with negative 3.84 billion. The exports and imports were in line with the previous readings, with exports at 38 billion and imports at 42 billion. The Swiss foreign currency reserves were 575 billion compared with 560 billion. We have Tuesday Swiss unemployment rate and EU industrial orders. Wednesday EU Commission releases economic growth forecast, and Friday we have the EU and German gross domestic product. Alright, on to the UK markets. No events on Friday. After the dovish statement from Mark Carney and the Bank of England last Thursday, investors are moving to a bearish stance towards the sterling, with economic data expected to show a contraction in the industrial and manufacturing fields. The Brexit referendum looms over the pound's prospects. The lack of clarity on when the referendum will be held, along with the uncertainty on how EU members will react to the draft agreement between Donald Tusk and David Cameron, makes an actual Brexit a probable option. Sterling slipped to 1.4469 on Friday, reducing its gains for the week to 1.6%. The FTSE 100 lost 44 points on Friday and closed at 5,847. The 10-year gilt yields were unchanged at 1.57% on Friday. The biggest mover was the GBP against the Australian dollar, 270 pips up on Friday, 350 pips range, going sideways today. Alright, on to the Asian and Pacific markets. Several regional markets are closed, as well as China, for the Lunar Nerw Year holidays in the region. The Nikkei 225 is 200 points down on Friday. In the Pacific, there are also no events on Friday. The Australian Prime Minister Malcolm Turnbull said he's yet to be convinced of the benefits of increasing the goods and services tax unless it boosts economic growth and employment. The government, which is expected to hold an election in the second half of the year, is looking at an overhaul of the taxation system, including a potential increase in the GST to 15% from 10%. The biggest movers were Australian dollar against US dollar, 140 pips down, and Australian dollar against Japanese yen, 150 pips down. Alright, last sector for the day is commodities. Oil traded near $31 a barrel with a range of $1.80 after Saudi Arabia and Venezuela met to discuss cooperating to stabilize the market, and US data signaled investors are split on the direction for prices. Gold had a range of $30, trading at 1,165. Silver had a range of 39 cents at 14.91 now, and natural gas is trading at $2.11 at the moment with a range of 9 cents. Alright, that was all for today. Thank you for the time. I'll see you next time. Goodbye.